After the news that dairy cattle tested positive for highly pathogenic avian influenza in Texas, New Mexico, and Kansas on Monday, March 25th, the livestock futures and its participants took the news and ran the board lower. But was that cattle market reaction to avian influenza justified, or was it an overreaction? DTN livestock analyst ShayLe Stewart weighed in on the matter.
I don't mean to make light of what's happening in the dairy industry and the stresses that they're enduring at this point in time, because whenever you have a flu outbreak, I think that it's important that we call it a flu because that's what it is. It's influenza, so it's a flu. It's not a disease, it's a flu. And, whenever you're faced with those kind of challenges, you never know how it's going to escalate. You never know what it's going to delve into next. And so I know that's why everybody in the marketplace was so unhinged and they were reactionary. And that's really how I'd like to summarize what we saw early this week in regards to trade. So it's so unfortunate that cattlemen, traders, and day traders, speculatory traders, everybody involved in the marketplace seems to have a mentality of react now, think later. And really that's what we saw transpire throughout Tuesday's trade. The feeder cattle complex fell anywhere from $4 to $5 lower. Thankfully, we didn't pressure the daily limits, and the live cattle market closed $3 lower. But now, as we're reporting here on Wednesday, the market was able to close at a higher position, but still, that was more so just a little bit of a dead cow bounce, not really significant in regards to anything in regards to position recovered.
Stewart said the market's meltdown would have been justified if dairy cattle were being euthanized, if infected cattle were sloughing calves, or if the flu threatened consumers. But none of those scenarios are occurring, so overreaction in the marketplace did occur.
I think that we need to be more discerning in how we choose to make our decisions or react. And I think the market would be better served that way. And the other thing I want to remind folks is that even though we saw Tuesday be, painful to watch, I don't like seeing feeder cattle trade $4 to $5 lower. We're still trading at all-time high prices. And so continue to believe in the market's fundamentals because they are what is tangible right now. The futures market can be easily disrupted by external factors, but the fundamentals of the market are tangible.
ShayLe Stewart reminds cattle market participants that until we start to see heifers kept back for replacements, tight supplies will keep prices high. We'll be right back.